Bitcoin can reach $48,000 and then potentially $69,000 next. And I'm going to be showing you guys exactly why that is. We're going to be taking a look at my ICT analysis, and let's get straight into it. Institutional order flow on the 12-month time frame is bullish. Down close candles are acting as support for the marketplace, and we do have bullish PD arrays being respected. So right now we are retesting a bullish fair value gap, a BISI, a buy side imbalance, sell side inefficiency. Between this candle's high right here and this candle's low, we do have a bullish fair value gap. Because we have that bullish fair value gap right after this down close candle, it makes this down close candle right here in 2018 on the 12-month time frame a high probability order block, meaning this can act as support for the marketplace before we do start to see higher prices. You can see that price has tapped into that upper wick area, and it is acting as support and real support, and now we are starting to see a bounce back to the upside. So that is where my analysis started off on the 12-month. Then I dropped down to a 1-month time frame, and you can see that we do have this low that is formed. We got a little retracement off of that low, which it just kind of retested this bearish fair value gap right here. After that, what was followed by that is a move to the downside. And what did that move do? Well, it just took out these stops beneath this low. In ICT's concepts, he talks about above old highs, there's going to be buy stops from retail traders, and below old lows, there's going to be sell stops from retail traders. So a lot of people thinking that this was the bottom in here got stopped out on this move to the downside. That move down is just for the purpose of smart money targeting those stop losses so they can buy their sell stops. So for every seller, there needs to be a buyer. They're going to take price beneath the sell stops. So it creates a pool of liquidity down here. Sellers at a lower price. Smart money's buying from those sellers at a lower price. Now we are starting to see that move to the upside. So we have the run on sell side liquidity. Price sees this displacement move to the upside, and then it takes out this high right here. So it takes out that high with displacement. That is key here. What is displacement? It just means energetic candles to the upside. In that move upwards, what do we have? Well, we have these fair value gaps that have formed right here. That is a bullish sign. It shows that smart money is likely long here. We have the market structure shift with the fair value gaps. That's smart money's footprints. Because we have that, I'm thinking that smart money is long here. And where are they going to take price if they're long? Well, they're going to buy from the sell stops. And who are they going to sell to? They're going to sell to the buy stops. So there's going to be buy stops resting above old highs. We do have 48.2K, which is my first target. That's the minimum target I'm looking for. And then we have above this high at 69,000 about, which is all-time highs. There's going to be more buy-side liquidity resting above there. Now, there may not be buy-side liquidity resting above there right now, but as price continues to the upside, let's say it ends up getting up here, there are going to be people taking short positions, putting buy stops above here. It's just how these things work. Retail traders put their stops below old lows and above old highs. That's what's taught in the books, and that's what the majority believe. Before we do continue, if you guys are interested in joining my Discord, it will be the first link down below. I cover multiple markets, including the indices, stocks, crypto, commodities, and Forex. I go over mainly my ICT analysis on those. And usually throughout each week, I am posting multiple day trade setups on the S&P 500 and the NASDAQ. Here was a recent one that we took a look at, basically just suggesting that sell stops have been ran, right? And now we're looking for buy-side liquidity to be targeted. So sell stops have been ran here, and now smart money has accumulated long positions, and they're going to target buy-side liquidity. So you can see that that one ended up playing out after we got a lot of accumulation in here. They took it above the high. So I'm posting setups like this all the time. If you guys are interested in that, check out the link down below. What we also have, besides the fact that sell stops were taken, we saw a market structure shift with a fair value gap. We also do have a change in order flow on the 1-month time frame. So if order flow is going to be bearish, up close candles are going to act as resistance. You can see that we have a change in order flow here. See how this up close candle acts as resistance if we draw out the open of this big up close candle that took buy side liquidity up here. See how price pushes down, comes back up, retest this down close candle as real resistance right here, and then we start to get that push to the downside. Also, because order flow has changed, we do also have this potential down close candle, which would usually act as support if order flow was bullish. We could extend that outwards. This is the last down close candle before price makes a higher high and a lower low. This is a bearish breaker block. So price retests that as real resistance, and then we start to head lower and push towards sell side liquidity. Same concept over here. Price took sell side liquidity. We see the market structure shift upwards. if institutional order flow is going to be bearish, this up close candle would act as resistance, and then we would push lower. It breaks through that. So if price returns back to this breaker, it can act as support before pushing us up to buy side liquidity. So same concept that we had over here, except now this is flipped. So this down close candle acted as real resistance. This up close candle should act as real support and kind of propel us into these highs. Now, does it have to push all the way down back into this breaker block? No, it's just if it does, it should act as support. The invalidation point would be if price breaks beneath this old low down here. Another thing that we could look at is these bullish PD arrays that we are in right now. So we do have this BISI fair value gap, which is a buy side imbalance, sell side inefficiency. Beneath that, we do have another one. So these are areas which can act as support, which it currently is right now, before continuing price higher. So now we're going to take a look at what I believe retail traders are looking at right now. I think a lot of people are thinking that we have this old level of support now flipped resistance and we should head back down to new lows. I am not thinking that. 95+% of retail traders are wrong, and it's not a lack of discipline. It's just the fact that these concepts do not have a high win rate. So this is not what's really moving these markets. So I'm not thinking that this is going to play out. I think a lot of retail traders are likely going to miss out on this move to the upside because majority of them are likely thinking that this is either a bear flag or a rising wedge before we get continuation downwards. Again, I am thinking 45 or 48,000 as the first minimum target. Now, if we go over an old example of what this kind of looks like after it played out, we could take a look back in the 2018 or 2017 to 2020 area on the Bitcoin price chart, where we do have this weekly order block right here. I marked out the open of that. You can see that we have this market structure shift to the upside. Here's the 2022 ICT model. We have the market structure shift to the upside after price took out these sell stops beneath an old low. So we have the shift up in market structure. It created a bullish fair value gap. We could extend that out, see how it acted as real support over here. Also, this last up close candle before the lower low and then the higher high, we could extend that outwards. This is our breaker block. And now we do have these overlapping right here. So we have a change in order flow. Since smart money is accumulating long positions in here, what are they going to do? They're going to distribute it to buy side liquidity. That's exactly what we saw here. You can see that they actually took it much higher after that. Now, if we look at this from a market maker buy model perspective, I do believe that we are on the buy side of the curve. If you don't know what that means, this is what the market maker buy model looks like. We get the original consolidation, first leg of distribution. Here is our smart money reversal right here. And then we have the buy side of the curve. So this is the sell side of the curve. Now onto the buy side of the curve. These two blue boxes represent accumulation by smart money as they're targeting higher prices. As it's on this buy side of the curve, meaning it's heading upwards, bullish PD arrays are being respected and it's in a buy program, they're going to take it above these highs that have been engineered on the way down. So they're taking it above the buy side liquidity levels. If we look at that same concept over here, the target is for it to take out the high of the original consolidation. And here's our original consolidation, in my opinion, all the way up here. So this is $48,000. We have our original consolidation, first leg of distribution. Smart money reversal occurred down here. Then we have our first leg of accumulation, potentially more accumulation going on right now before we do target the high of that original consolidation. If you guys follow Zeusy, he is on YouTube and Twitter. He talks about how to know when the smart money reversal is in, and a good sign is when you get a SIBI fair value gap broken by a BISI. So we have a bearish fair value gap down here. And if we extend that outwards, you can see that that is broken by this bullish fair value gap. So a BISI breaking through a SIBI fair value gap. So that is a good sign that that smart money reversal is in. Now we are in a buy program on the buy side of the curve until we reach that 48.2K level. And while it's up there, it may also target that all-time high. So I'm not saying it has to, but if it gets up there, it can potentially target that all-time high. Again, invalidation point would be if we break beneath that low at 15, 16K, then I would be wrong. So the very low down here, if we get an exact level, it's about 15.5K. That's going to be it for this video. I hope you guys enjoyed, and subscribe and like if you would like to see more content like this.